Hey, what's up traders? This is Trader Tim from eMiniMine.com doing a trade recap video for the 11th of June 2020. And what a day we had. Big sell-off following the gap down. Now yesterday we had the Fed meeting announcement, and I can't say that I'm super surprised with this move today. You know, the whole buy the rumor, sell the news. We've been on a pretty strong tear, really from March, but especially from the midpoint of May. You can see in the extension here, the extension being a high to high draw on the SPX. We traded at the 50%, traded through the negative 23, and then through the negative 61.8. And typically when that happens, you end up reverting in a pretty harsh manner and fall back to a traditional halfway back. And so that's currently where we're at. Whether or not we go a little bit lower, I would watch for maybe like a doji day or a smaller body candle down here. If things were going to round out, then we would find support at this next 50%. If I can grab it, like so. On Tuesday, I put on a handful of puts at the close, and going into the Fed meeting, I wanted to have a hedge. I mean, this whole run up, these first 6 months already this year have just been, knockout home run as far as trading goes, swing trading, long-term portfolio. It's just knocked it out of the park. So I put on the puts. I bought 3 10s. And this is one instance where I chose to buy June because so expiration is next Friday, and I chose to buy the June ones because I was expecting either a move to happen, in the next couple of days, either the day after the Fed meeting today or tomorrow, or nothing to happen, in which case I would just close out the position. So very asymmetrical risk, meaning that they were super cheap, but if they were to trade down to 310 and then keep going, the reward was much, much greater than the risk. So pretty awesome day to have that follow up from kind of the last couple of days of sideways. Going to today's trades, let's go to 5-minute, and then we'll pull over to the 512 as well. So when we get a situation where we have a breadth and advanced decline line that are extremely negative from the open, and I'm talking, we opened about 2,500, minus 2,500 on the advanced decline line, and when we open that low and stay that low, like we just went lower all day, not by much, but we clearly did not improve on the advanced decline line or the breadth. You can pretty much sell any bounce and hold to the close. You're not always able to hold to the close just by trailing your stop. You're going to get stopped out here and there. But I wanted to go to today's 5-minute, and you can see, I just kind of start with the open. We had a nice little counter trend play shortly after the first 15 minutes, and it was this one here. So first 15 minutes, we had a little bit of a rally. You can see these 3 bars here. The first 10 minutes we moved down, and then we were kind of indecision for the morning, but the breadth and the advanced decline line were super negative. So as we were going up here in the intraday on the chart, the breadth and the advanced decline line were staying negative. So I was looking for an opportunity to sell. So this little counter trend where we broke the swing high right here, we had a high-ish tick shortly before that 30-minute mark, and then we set up in a short, and I was able to trail that one down. In a situation like this where it drops really, really fast, you can come in and kind of either trail an extension like that, or when you get a little bit of a bounce, you can draw up the next retracement, and as soon as we break lows, you can draw up that next retracement. We've also talked about just trailing the swing highs as well. That's fine too. So this one I was taken out down here about 31.05, and then we kind of moved sideways for a little bit longer through the morning, and then we set up in from a high of the day. We put in this low here and then bounced, and then we broke this swing low over here and then set up in a halfway back short, and from there it was just down, 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 down. And with my swing trading positions, I like to manage them at the close. On a day like today where you have such a strong breath, taking that short and doing whatever you can to hold as many contracts as you can into the close is really the only objective. And we had pretty much lower highs throughout the entire day. A little bit of flattening here over lunch, and then even into the close. A little bit of a rally here, but it did not take out the swing high. The other thing that I found interesting, but not surprising, if we look at the gaps from today, we opened at the gap fill from the 4th. Then we traded down through the next gap fill, ripped pretty hard, and then we closed, or we bounced at the next gap fill down at 94.50. We didn't quite tag it. It was a 96.25, but we got pretty dang close. And so we haven't really taken out a swing low yet. So just because we had this big bearish day doesn't mean that the uptrend is over or the rally is over. But if we cannot hold this 29.36, then I would go ahead and take a peek at the full halfway back. Big pop in the VIX today. We can kind of expect that. So let's take a look at that really quick. Breaking the swing high from the 14th and the 4th. And that's important if we come and look at the SPY and we look at the 14th right here and the 4th. So the VIX is trading at these levels, but the S&P is higher. So that we'll see what happens tomorrow, but when the VIX is kind of leading by breaking these swing highs, it's leading the broader market in that the broader market has not broken these swing lows. So that first level will be the 61.8, and then if we break that, we'll look for the full halfway back. Just running through those couple of swing trades as well. Amazon obviously pulled back a little bit today. I'm just going to leave my stop alone here. I actually did take a little bit off at the open, and then I'll leave the rest of the stop underneath the swing low. The other one was CDNS. That one ended up taking out the swing low, so I'm out of that one. And then the one short I had is on its way, short from the 4th. The 3rd was the signal bar, the 4th was the entry bar, and this one is broken the uptrend nicely and kind of on its way lower. So pretty awesome day, pretty awesome year really so far, and you want to try and position yourself on the other end of what the mass media is doing. So if things are seeming like everyone and their mother is able to buy and get in this move and make money, you should probably think about either selling some or hedging. And that mindset or thought process of always considering the opposite side of the trade can really be very, very helpful in the long run. So as we go into Friday, tomorrow, and then next week, I'll be watching this retracement here, see how we react. I would be shocked if we didn't go a little bit lower, but we'll likely end up having some kind of support. We have these highs from back here that should act as support as well. And when we get these longer consolidations over the course of a couple weeks, in the moment they might seem kind of blah, and there may not be that many great trades in that scenario, but then when we retest that level, it's a fantastic opportunity to place trades, and then that what was resistance then becomes support. So if you have questions, feel free to put them in the comments below. I hope everyone has a great weekend, and I will talk to you all soon.